Hey everybody, what's up? It's Booksy. Today is Sunday, August 4th. I'm going to be doing a video just to quickly kind of update, see where we are, and talk about earnings a little bit, talk about the market drop a little bit. I'm not going to pay too much attention to that right now. It's not that I don't think it's important, but the NASDAQ is in a correction phase, and that's a very tech-heavy industry. It's also not something that, in my experience or opinion, I guess, that AMC has been heavily exposed to, although I will say that the overall fear is at a high right now. The VIX shooting up, and everybody's kind of afraid of a recession because of a higher unemployment rate that came in. And those things are very important. There's a lot of little details that you can look at as indicators for possible recession coming up. I'm not going to debate those things or argue that they're not good, but Wednesday to Thursday, just to Friday, it was just completely different attitudes about people. And it seemed like everyone was fine with the inflationary numbers. And then all of a sudden we were just panicky and selling. And GDP came back second quarter really strong. That's pretty much the best indicator we have of our economy. And it looked robust. And so I don't really know where this is going to go ultimately, if it's going to lead to bigger and worse things. But for now, all I'm going to do is really just focus on AMC, focus on GME, may hit IWM just a bit, and that's kind of it for today. So I'm not going to be able to do any kind of stream Monday morning. So first, I just want to talk about earnings a bit. So we did record during earnings, and I went through and I took notes, and I'm not seeing them right now, but basically it was good earnings. Hit on a lot of different things, and at the end of the day, very positive outlook going towards 2029, where the next bigger round of debt is due, and everything else they felt was not worth really fussing over. And in terms of earnings itself, TradingView shows a EPS beat, earnings per share, and then a very slight miss here, but really that's almost negligible. It's essentially zero. I went to, I think, Yahoo or something else, and the numbers don't look quite the same. So I'm not going to really focus too much on that. We already knew that the quarter was going to be weak year over year, and that it might have like a moderate beat just because sometimes they estimate really low and then the numbers come back better. Q3, Q4 looking really strong. Obviously, Adam Aaron during the earnings report, was very, very bullish. He said bullish like 3 times, and that's unusual for him to say that. And I don't know if it's a good thing, to sit there and say that your stock should be bullish or that the outlook should be bullish. A lot of times that could cause maybe a little bit of a a reverse action from what you may want. But on the whole, I think there was good reason to be very positive. And we've talked about this quite a bit, like AMC's turning a really big ship that's going the wrong way, turning it into a really positive direction. Still, it didn't matter. There were still hit pieces on AMC on Friday. I saw them come out, same exact thing. They were like, you need to focus on the debt. You need to focus on this. You need to focus on that. You need to sell this stock and blah, 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 blah. Nothing's changed, right? From the short perspective, even though everything's changed, over the last 3 years, and it's already been brought low. And so at this point, you're kind of like, well, look, we can keep going back down from a fundamental point of view, just to do retracements and go back and fill gaps or go back and, retest bottoms and all this stuff. But where is AMC headed, like long term? If you think it's going to go bankrupt, that's one thing, but I feel like these kind of fears are just kind of like sitting there, like nothing ever will change the mind of the short. And anyways, that's all I'm going to say about that. Fundamentally, I think it's looking pretty positive for the next couple of years. You have box office records being broken. This is after COVID. This is after everybody said you're never going to have people return to the theater. It's just basically like they're just flat out were wrong. I don't know what else to say. They're arguing like, oh, it's these one-hit wonders, like the Deadpool. Oh, it's not going to matter. Yeah, okay. Well, they keep saying that big movie after big movie after big movie. It's still coming back, and they're still breaking records and all this stuff. And it just goes to show that the market is not all win-lose. I think that streaming and movies can coexist in a win-win environment, and there's a big enough market out there to share in those profits. So you got a much leaner, meaner AMC now. They've cut back on all of their wasteful theaters that they're just kind of pouring money into for no reason. Basically, their financials have tightened up. They're sitting on like $700 million in cash. They've deferred a huge chunk of debt, possibly going to convert some of the other stuff into equity. And we don't need to talk about dilution every step of the way here. I know that that's a possibility, but it looks good. That's kind of my summation on it. And I felt very positive about Adam Aarons talking this time. He was way more energetic. He seemed like he must have drank his coffee or something. And that's good. And he's staying off of Twitter, I think. He just kind of seemed like he was kind of done with that, which is good because I did not like that one earnings that we had. I'm going to talk about technicals now. So what I'm seeing lately, and I've some of you guys, this will be the first time you've maybe watched a video in a while. I'm not going to be able to do a full recap. But I'm going to talk about just really quickly this after hours price action. I think this is very simply what I call a shrinking iteration. So you've got a 1-2. So this is essentially the exact same move happening twice. It does look a little like that classic 4-top. We talk about that, the cat ear, the second cat ear, the one that historically has some serious breaking either up or down at the very end of it. And right now it is crossing, potentially downward in some ways. And I'm going to get to that in just a second. But on the whole, it looks a lot more like what happened leading up to May than it does a lot of other distributions that we've seen. And that gives me some semblance of hope here at the end. So right now what I'm seeing is a kind of a sell down from the final top here on this M cross. And this is a big creek cross. Again, I'm going to switch off of extended hours in a minute. Basically, this is the most recent creek we have from the very top to that big spike that we got on the debt deferment, like when they were pushing it down the road. That news sent it rocketing, and then the early earnings sent it dropping. But it's just a double flush, in my opinion, like a 1, 2, 3, and then we're getting a 4 now. And I've got good reason to believe that this is a similar sell-off. Every time we've had these kind of flushes on AMC in this range, it's been a 618 to 786 retracement. In fact, they're positioning they're positioning the stock specifically during these several months to rise, exactly, essentially 618 retracement level. So from the previous bottom to the top, that's a 618 retracement back to this midpoint, which I'm calling, I'll call it like the middle liquidity or the midline, and this is 485. And there's a lot of history to this 485 target. If you've seen any of the streams over the last 2 months, I've been talking about 485 like religiously, because when we first came down, I marked it off as an important area. It's kind of this initial entry into the range. It starts as supply, and that's really important. This very first sell-off we have has a repeated series of up thrusts. It's probably, frankly, just some short covering before a final sell down, and that ends up being your main selling climax, so to speak. The bottom. It's not really like the biggest sell-off, but it's the bottom. And at that point, you've got, from that point forward, sort of an area to kind of work around. And it ends up acting mostly as support throughout this range. It's actually a pretty strong region of support, and it very rarely drops below it except just to bounce back. And these kind of areas we've plunged beneath it have all been 618 retracements. So that started with that big run-up. This is with the Roaring Kitty stuff. This was back in June. And then we had that retracement, and then we kind of building out. And when I go to the non-extended hours, you're going to see this maybe a little differently because some of these lines don't really match up very well on extended hours, and I'll show you why in a minute. But anyways, same thing here. Push up, 618 retracement back down, push up, and 618 retracement back down. This time lands you right on top of 485. So what I'm expecting on Monday, at least to some degree, is a continuation of this sort of double flush that we saw going into earnings. I fully expected to see it pop up. We talked about it on Friday. There should be some kind of pop and then a bigger drop back down to try to get to those lows before potentially taking off. And I'll give you a case for that in a minute. I know that there's going to be a lot of people that are looking at this like, that's not going to happen. The market's bearish, yada, yada, yada. I get it. Anything can happen in the market. This isn't meant to be like a fortune telling service or something. It's just me reading the chart. And I can see this as a very strong possible bottom if we can catch it. The setup here is actually really good for a breakout, I think. In my opinion, it looks great. So that's why I've got the extended hours on, just to show you that up thrust and then the downward motion. Could we get a repeat of that on Monday? Maybe. But then I would expect it to kind of work its way back out, and eventually we should see it move back up to this 585 area for a potential SOS, which would then lead you out of here. I'm going to go ahead and turn off extended hours now. I want you guys to see the picture as I intended it to be. And I know that, I get critiqued a lot for messy charts and stuff. Don't really care. If I don't think a line is worth keeping, I'll get rid of it. But a lot of times the reason I've got it is because I'm using it as a way of understanding the waves, and I use tangents to understand those waves. So it can be a little bit complicated at times, but it's not something I can't read, and I'm going to explain it to you. So basically what we've got here are these parallels going down and two parallels going up. And this is actually a symmetrical range. So you can see this box I've got down bottom. We have perfect symmetry across this range. And the point in case is if you measure from the breakout right here, which happened on June 3rd, it leads you right to this breakdown. It's essentially the end of the wave. And it goes, again, the middle being right here on June 26th. Essentially like perfect symmetry across this. And you can look at stuff like RSI and try to like figure out what that means and all this other stuff. But the big picture here is that anytime we've been coming back down on, this in this particular time frame on 30 minutes, but if you go up to like, let's just say like 4 hours or something, you can see we're much higher. It's a little harder to read, but you can see the same kind of lows here every time they're being met, kind of down here beneath like roughly like 47. We're getting pretty strong reactions, and as it's going, it's kind of narrowing, which makes sense. That's that shrinking iteration motion. But it's also kind of building upward, and that's kind of the big picture here. And here's my notes; they're way on the larger picture. This is the same thing that happened to us last time when we were building out. After hitting a low, we worked our way up across a liquid center here, across a centerfold on these. I call them falling S-curve or shallow S-curves, but they're these kind of like early waveform crosses that sort of help build out the range. And by waveform, I'm just talking about a simple like up, down, like an M shape, right? And it creates this wave down. Sometimes I'll call it the cat ears on the S-curve, but I usually just call it a wave cross. So that is where you sort of generate a middle for your range. And the same thing happens in distribution. You can see I'm pointing out kind of that same principle right here with the support and then the resistance and then the secondary resistance up here. And oftentimes that ends up pointing to what will later become like a channel. And in this case, it does. It ends up being like a mimicked channel on the bottom in terms of an ascending line. And probably to some degree the opposite as well. Like there's a mirrored downward trajectory as well. But the point here is that you get these nice rounded tops. They don't look like these kind of up thrusts that are just sort of staying really low. These are trading really low for long periods of time. By comparison to these like kind of higher volume up thrusts, you don't really get that here. Yes, of course, on the top of a wave, a microwave here, you're going to have a couple of up thrusts. But on the big picture, you're spending a lot more time. And I drew this wedge. You're spending a lot more time in the upper 50% of this wedge. That's a pretty good sign of most of the time of accumulation. And the big thing is the volume as an indicator. Are your tops like super high volume sell-offs that are constantly pushing resistance and failing? Or is it more like gentle and typically that gives you that rounded look? And then this is also that iterative move, like pushing up, falling, pushing up, falling, pushing up, falling. And notice that the general direction of this is upward. And then at the very end, you're going back to this very early place that rejected, right? And we've been testing. But this time we kind of hit it right on the nose and then we take off. We're seeing something really similar right now. And I've got this kind of in a little bit more of a complex way because of some of these creeks I'm looking at because of this, again, I was measuring out some things. And I don't need to have all this stuff on the screen all at once, but you get the idea, okay? Look at the lower 50% here. We're not spending a whole lot of time in the lower 50% of this wedge-like action. It's just not there. We are spending a lot more time in the tops. Aside from this early kind of up thrust here, there's not really been any super high volume sell-offs on tops. Yes, there's some spikes here and there on some of these push-ups. I don't find that to be particularly great. But when I look back at the overall picture, it's not like the volume's been pretty even, and flat overall. And even like zooming in, aside from, again, a couple of these kind of more severe moves, there's really not really been much to say in terms of the difference between ups and downs. Fairly even keel throughout, and that's pretty different than something like this where you're getting like a really high volume ramp and then a high volume kind of sell off in response. So I find it to be, somewhat okay in terms of volume, but then on the big picture, I really am focusing on that. We're spending a lot more time higher. We're really only reacting when we come down. We're making consistent retracements. And now we're really coming back to that same spot, that we started at back here, which frankly, like you go look at the 13F filings, this is where most of the action's taken place with these institutions. And I think that as long as everything goes well, should we find support on that 485 or shortly, close to it, but right above it, right? I think you're ready to go. I think you should see a reaction back to the top here. I've been doing measurements. These are accelerating motions, like push, push, push. They're getting steeper and steeper as they're going up. And they should be heading towards an early August move. Now, I've said that before, and we did get an early July move, early July move, but it didn't break out. Well, that 532 ended up being a problem area, and I had marked it off and talked about it quite a bit. I didn't feel like we ever really resolved that, but we're coming to a place now where we are, and you can see like this push down that we've been having. I'm moving this green line. Really represents to me, I know there's higher creeks here because of these pushes. This really represents to me like the greater wedge, just kind of like pushing us down. And these wicks are all just kind of pushing up above it on the 4 hour. I think we're right on the edge. And so you can see how another advancement back to that 540, 550 area, which has really stopped us, more 548, would actually give us a jump over that wedge. And I think that that's exactly what we need to kind of propel us up. I could go on and on and on about the setup with the 50% layups to like how clean they are to 8, and then ultimately up to about this 13 area. Big picture, if it gets a break to the upside here, I know it seems a little crazy, but I fully expect that it could go to 1388 and possibly even up to as high as 19. There's a lot of really strong targets and reasons for that. It's not just, willy-nilly stuff. The 1618 on this move right now actually goes up to that gap fill. So if you do like a 1618 from this move up to down to the bottom, like push, 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 you'll see you guys are like, what? From the bottom around May 10th to that high around the 14th down to the lows on the 31st of May, you'll actually get a 1618 that pushes all the way to that gap. The measurements here are always going to be really nice. It's all mathematical, but suffice to say, I've got this red creek drawn. I've got this green creek drawn. To me, what this looks like to me is a cross of one, and then we're going to retest down here. And then if we can hit that bottom, we should be able to just advance up. What's the worst case scenario here? Well, in my opinion, I don't think it's very likely that this just continues to drop right now. I think worst case scenario is probably that it moves up maybe as high as 550s again, and then fails and starts coming back low. Like I could see it maybe reversing on like a major upthrust, like a big player such as your Vanguard, who's got like 30 million shares in AMC. They keep adding more to their position, exiting the play or something like, we're going to go ahead and take it down, because the market's dropping or whatever. You know what I mean? I don't know if that's the why or the reason, but definitely could happen. But I think that would be after a major upthrust. I think most of what they're doing right here is actually letting out another one of their operators back here. It's not operators, but one of their funds. They had announced separately on February 29th and May 28th that they had a 350,000 short position. It was just one of their many funds that they have. And I suspect that this is a big part of the reason why we're seeing these pushbacks, just gentle covering every time we're dropping below. That's my suspicion. I can't prove that, but I genuinely think that this still looks really bullish compared to some of the other examples where you have clear and evident, bearish action with high volume up thrust, a lot of time spent low and not a lot of time spent kind of bouncing out. We're getting a lot of this nice rounded top kind of business. Could it take longer than this? Could it come up and then chop down for 10 days or 15 days? Sure. I mean, there's no perfect answer to timing, but I will say that I've got a lot of indication that this could be bleeding out to about the 14th of August and probably faster than that, like this week, which is kind of crazy. I know, but that's what I've got. Now, when you look at something like IWM or you look at GME, you may feel like it's not going to happen. There's probably a number of reasons why you might think that. I got you. I feel you on that big sell down. All I can say here is that there's a lot of volume here in this low area. And I don't think, even though there's a lot in the top, I don't think everybody in the market is actually exiting completely. I think a lot of your big players already got out. I think they already exited up here. That's what all this selling is. I think this is just meant to kind of scare retail. And this is yet to be proven. We will see what happens. Obviously, small caps are going to be affected by rate cuts. They're also going to be affected by a recession. So, but I'll say this, that on the big picture, largely I had pretty well called this move. I mean, I thought it was going to push up to about 218, maybe to 220. It went higher, which is fine. But then I said, it probably would need to come back down. This is a typical wave up, down, up, and then you need to have a down in order to come back and check that creek. It's right where we landed on Friday. So I haven't seen anything just yet to make me think it's breaking down. That's just a technical perspective, okay? I understand people are scared right now. I get it. But from a technical point of view, it hasn't done anything that's looked like a breakdown. It really just looks like a retracement, almost like an SOS within an SOS. This is the big low range. This is the SOS. Now you're getting another SOS, but you have to back up to the creek because they didn't actually check anything when they left. And that brings me to my next point, which is that, technically, if you look at it, IWM could come down to 204 and the Russell 2K, and that would be a backup, to this creek. Obviously not the larger one, but it is possible. So, it's not I know being at 2.8 might freak a lot of people out, but it's not that unusual from my point of view. Also, when you look back at the way we entered here, this is the way we originally entered back in 2021. This time we didn't do that. We kind of just passed through this 210s area. It's 209 up to 212. So I'm just going to say 210s. And we kind of just passed right through it and went almost all the way to the high here. We went back to this supply area back up near 227. And that's as far as we went. And then we just kind of topped off and then dropped really abruptly, it seemed. On my chart for RSI, it really looks like it kind of went all the way. And I measured it out and I said, I think we're going to come back down at 210s. We went lower, might still go lower, but it wasn't exactly surprising. So even though the market was really shocked by some unemployment numbers, to me, it seemed like it was in the right place at the right time. The news seemed to add to just this idea that, this was already in a distribution. I mean, look at it. Just classic kitty cat here right there. And then it dropped, it was it was already going that way. This was historically overbought. It hadn't been this overbought in 2 decades or something ridiculous. I mean, I went and looked and I just couldn't even find almost anywhere it had been this overbought in a long, long, long time. So it definitely was going to have a pullback, and we'll see. We'll see what that becomes. But I feel on the whole, retracing back down to this floor here is almost necessary. We didn't test it on the way out. We just broke above it, gapped up, and then if you look back, that's also the top here is in the 210s area. If you look at this little SOS, it also has a breakout. It comes back really low after breaking above these highs, and this was back in December of 2023. But this is just a classic example of it's doing an SOS motion, but it has to back up to the creek in order to check it, and then it can start advancing. And and it backed up pretty far. I mean, it's not a huge retracement number, but if you look at where it comes back to into the range, it comes pretty deep into that range. And it's really going back to historic levels that need to be checked. Like, this hadn't been acting as a support at 188 since, 2 year or, year and a half prior, year prior or whatever. So when I look at this and I see this push up, I'm like, why would we not come back down and check this and then potentially advance maybe closer to November or maybe closer to September in the case of the rate cuts? So I don't know, in terms of IWM, if it's just going to like turn back around or if it's going to go lower. I really don't think there's a super strong answer I can give you. And you can see that daily candle is all kinds of misleading. Just basically just a wick, high, low. It just found its footing. If you look at where it's at a place where it, potentially could be finding support right now. I mean, it's right on the money, right on the nose. So I'm not saying it will, but it's a pretty clean drop here. I even had the line going down. It kind of met it, went below it, and came back above it. So I don't know. It looks okay to me for now. Could change this week. We'll see. GME. I'm gonna skip this kind of weird comparison bit, and I'm gonna say trust me, but I'm just gonna say like, look, GME's had like kind of a big trial lately, and I think a lot of folks are thinking really, really low. That is not what I'm thinking. I'm looking at this like it's probably just a terminal shakeout. It's got the S-curve. It's completed. Like, in my mind, it usually pairs right between these two ears as the big ones right here in the middle. And then that's the middle of the S-curve. Volume usually shrivels a bit. You get a really big chop. Usually see two distinct bumps like it's crossing a creek. This is the parallels that were being established on the way up. So it's definitely, this is the one in my opinion, and that's right on the nose for that S-curve down, and it's hit the low. I mean, it hit like pretty much to the dot, like 1250 or 2050s, and that's also an 854 retracement on this biggest move all the way up here. So it's a pretty deep retracement, but it's not a throwback yet. And historically looking back, it seems a little odd. I know I've got 3 here. I think they're all kind of working different ends, but the lowest one was met and it bounced. And so this is like the trend that started it all, and that's very typical. Now, just by comparison, AMC already hit that. It's kind of like on the same marker right here. It's kind of bouncing along near that trend, trying to hold that support. Hasn't really shown that it's going to hold it yet. And it needs to do that, but it would do it if it goes into an SOS. It would be back above that. And traditionally, AMC does often do that kind of drop before moving up back above. So I'm not panicking about it, even though it's below it. It's done that before. GME was way up here when AMC was doing that, and it was nowhere near that trend, and now it is, and it met it at a fib level. I've got a lot of halfway points. One is around 26, one is around 33, and then ultimately up to like 50 possible. I think my most conservative target right now is probably the 33. That's the one I'm leaning towards the most, and there's a lot of reasons for that. It has to do with this setup. All I can say is this, that according to this theory that I've got, I know it's a little weird. I'm not going to go through and explain this, but I will say that I do have an estimation for Monday, and I've had this estimation on the chart for a little while, for Monday, August 5th, as the potential turning point. It's not exactly in the morning. It looks more like right at the end, so it could be more like Tuesday. But that would be where it potentially breaks back up. Now, in order for that to happen, it's actually a lot closer than people think. The nature of a spring is to get you to basically gut check your market, which is what's happening. Look at where it is right now, and then look at where it's taken off from in the past. Everybody's flipping out, saying it's going to dump, and go back low to like 17s and all this stuff. I don't know about that. I think it's at a place where even if it wanted to go down, it probably would need to at least come back up to 25 in order to generate what I would call like a hook, like pump here and then dump. That seems likely if you're going to go down further. So you still get a reactive move back to the upside. But it's also a big part of the spring is to jump your creek, because the creek itself poses like a problem for the market, which is your trend down. So you can see these pink lines have got kind of pinkish lines going down. GME's riding it right now. It's on it. It's going a little bit steeper than I like. It keeps getting steeper and steeper, but that's okay. That happens sometimes. And if it's able to jump the creek at the same velocity that it came down, if it can react at that same velocity back up to 25, it's over that creek. It's broken out of that downward trend from those two tops. And that's a breakout in my book, or a possible breakout. And at the very least, you would expect it to come up back towards maybe this $30 mark to try out an SOS, right? Or distribute, which is still a possibility, but I'm reading this more as a terminal shakeout. I know it's crazy. I'm going to be, people are going to be like, nah, you're wrong. It's going down real low. Okay. Maybe I'm wrong, and that's fine. But I just see the chart the way I see the chart. So for me, like, I had kind of been looking at this and trying to posit particular lows, and it seemed most likely to me that this was going to be the low right around 2050, and then after that, bounce and react. If it doesn't happen, it doesn't happen. But this would give you confirmation if it came back above 2350, had this push up. This would be a pretty solid confirmation that we were over the creek, and it would of course have to continue. You can't just rely on a big push up. If it's going to have a hook, it's going to be on this little blue line going up here, meaning it's going to like react like a wave, because this is a wave up. This is like a 50% cross down, and then you'd have a reactive wave back up. And if it doesn't want to advance, it would probably stop here. So it's going to be really tight to get through here and then advance, and my thought is that probably there's some kind of EMAs or something that'll be met right here, and people will be saying it's bullish, once it gets up here, once it does that move. I see another potential creek crossing right here on the white. So I think there's going to be a lot going on in this pocket between 25 and 27. If we're going to, have any kind of reaction move, that's where it would go. In terms of downside, frankly, I don't really know why you would stop at 17. If I'm dropping, I know there's support here, but I'd be thinking you go ahead and go back down and just do a check on the creek back at 13. I don't see how that happens without some up and down. I don't see it just dropping off the face of the earth right now. It's pretty darn oversold. I think even up to some of the higher time frames, it's like really oversold. Even on like the 4 hour, it's pretty low below here. So I'm not buying it that it's just going to keep dropping. But I would just say, well, why not just keep going? Why not go ahead and just have the sell down? Why hasn't it already dropped, super far? And I think it's because it's like a terminal shakeout, and I think it's going to reverse. But that's just me, And I would just say if it were going to go down, why not just go ahead and head down and check that creek at like 13? And the same goes for AMC. If it breaks down, it's going to go down to like 3 something. I just don't see why you'd stop any shorter. There's already like trends established for it, just like there is for the upside. There's always trends established for the downside, and it's down here. And so you could see how that breakdown will lead you down to the 3s. So we're going to have to watch it real close. I'm not particularly concerned right now. I don't think there's any kind of major evidence that it's breaking down. Even though we've come low, it looks like to me it's a retest of this pretty critical region right around the 4 hour 180-day moving average, and then also on that really, really important 485 mark. So that's all I got for you. If I do end up doing any kind of stream tomorrow, it will be late in the afternoon. I hope you guys have a good one, and I will talk to you later.